Well, it's official. We got a lot of great information to share with you. Great data regarding the housing market from across the country that will help ease your nerves to let you know that the world is not ending. So, hey, everybody, Tim Weigel, Watson Realty. And I know you see it all the time. If you read the headlines, we got some serious issues in our economy. And although there are definitely some issues in the economy, I got some great information to share with you regarding the housing market and the imaginary bubble that the news media likes to say we're in. So let me share my screen with y'all and get ready for some fun with this lovely slideshow. So, and I'd like to say thank you for my resources that have been able to keep me up to date with some of the information that I'll be able to share with you so that you will be more informed. All right, so first off, let's go ahead and we'll dive right into it. Interest rates. I know everybody worries about the interest rates because they have been going up compared to the beginning of the year. So Sam Catter, our chief economist at Freddie Mac, mortgage rates surged as the 30-year fixed rate mortgage moved up more than a half a percentage point, making the largest one-week increase in our survey since 1987. So it's been a bit. And right here is how the interest rate's been moving throughout the year. But 6%, I mean, what I would say, if you're nervous about those rates going up, and I mean, we haven't seen rates like this for quite some time, ask your friends on the first home they bought what their interest rate is. Ask your parents. 6% is definitely up there, but it's not anything that I would get freakishly nervous about. One thing I know that a lot of people are starting to say, you marry the house, you date the rate. So interest rates could potentially go down here in the future. Did I delete that? Whoa, okay. So Fed Chair Powell now stated, I'd say if you are a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. Okay. Now, a lot of people have taken that and ran with it, but you got to read a little further. We need to get back to a place where supply and demand are back together. Raising the interest rates is going to make it where it's even, so we don't have these crazy prices moving up as fast. Where inflation is down low. And mortgage rates are low again. So not anything to panic, just trying to bring it to where supply and demand, the pandemic has pushed it where supply is low, demand's high, and we're not even, and we're trying to fix that. So the low rates of the last few years were an anomaly. You know, it's been a while since we've seen rates go down. In fact, I can't even say I've seen any time that it's gone down into the twos. A combination of freakishly low interest rates and Federal Reserve intervention in the bond and mortgage-backed security market, now that the Fed has ended quantitative easing and is raising the rates. So rates are going up. As rising inflation and mortgage rates bring U.S. housing demand back from 2021 frenzy, Realtor.com's newly updated 2022 forecast predicts inventory will grow double digits over 2021 and offer buyers a better than expected chance to find a home. So this is good because one thing I've seen with a lot of the buyers is they've struggled to find a home and then they got frustrated and they continued to rent. And renting is not really good if you're trying to build one, wealth for your family, and two, you want to be secure in the future. Because guess what? As inflation goes up, landlords are going to raise your rent. As they raise your rent, guess what's going to happen? You're going to have to pay it. If you own a mortgage, you wouldn't have to worry about those raised rates. So now a lot of people are saying that we're heading for an economic slowdown. So recession fears surge among CEOs. They say in the next 12 to 18 months, we'll be in a recession. Personally, I say we're in it. Definition of recession is 2 consecutive quarters of negative GDP. Well, we've already had one this year. And guess what? Today that I'm doing this video is the last day of quarter 2. And I'm pretty sure it's going to be negative as well. I'd be shocked if it wasn't. So throughout history, during a recessionary period, now this is good news, interest rates go up at the beginning of the recession But in order to come out of a recession, interest rates are lowered to stimulate the economy moving forward. Historically, we have seen a repeated uptick in interest rates and followed by lowered interest rates. So what that is saying, and this is true here, because of the inflation going into the recession, we are driving up the interest rate to force us into a recession, which in turn, once we're in there and we see it working on the inflationary levels, we will pull it back and interest rates should go down to get out of the recession. So here's a little graph that kind of shows several recessionary periods and how it happened. Here we'll put it in a little chart so it's easy to read. And as you can see, rates have always gone down by the end of the recession, which means you buy a home today, you can always drop that rate in a year because that's what a recession is going to do. It's going to give you that opportunity. So Fortune said, over the past 5 recessions, mortgage rates have fallen on average 1.8 percentage points from the peak seen during the recession to the trough. And in many cases, they continue to fall after the fact, as it takes some time to turn things around, even when the recession is technically over. So this is all good news. Now, I know a lot of people equate recessions with housing crisis. Not necessarily. Here's the last 6 recessions. The biggest drop that the housing has had was in 2008, which we caused the recession. But outside of that, 4 out of 6 times, your housing value has increased. So, and the one time in 91, it's only a 2% drop. That's nothing. Now, here's 5 graphs that's going to really sum up what our market is doing, help you out. And, you know, if any of this leaves any questions, please let me know. I'm just sharing the information, and based off the graphs, it's not as bad as the media might be playing it out to be. So showings have skyrocketed over the last 2 years. And as you can see, our showing requests are starting to go down, but we're still ahead of pre-pandemic demand. So even with it going down, it feels like it's going down because of what we've been in, but it's still higher than what we came out of, which was also considered a good market. Now, existing home sales, we do anticipate we're going to see less sales this year than in 2021. So we're going to see homes increase on the market. Now, when they increase on the market, that's not a bad thing. It just gives the buyers a better opportunity. But because your home doesn't sell in 3 days, doesn't mean the market's in trouble, okay? So don't freak out on that. 2022 total home sales forecast. So most of them are saying anywhere between 6 million to 6.7 million homes this year, based off different sources. That's not a bad thing, but they're all in the 6s. So they wouldn't be close forecasts if we were in an issue. Now, estimated home price performance. So what we're looking at is where we see home prices going over the next few years. All positive, none of them are saying decrease, but 9.3 this year, and then we're going to start seeing 4s, 3s, and 4s. So a more normal, slower market for growth than what we've been experiencing since about mid to late 2020. All right, 2022 forecast update for inventory. Originally 0.3% increase, now we're thinking 15% increase. So we're going to see a lot of people jump off the fence when they sell their home, fearful that this is it for this great market. And then buyers are also going to be jumping off the fence because they're going to have the opportunity to buy great homes. But inventory is definitely going up. But again, it's not going to sell over the weekend, most likely. It might take a little bit. It might take some work getting to market it right, but it'll still sell, and we are still in a seller's market. So lots of great information here. Hope this was helpful. But as you can see from the chart, from the data, looking at historical data, looking at forecasts, looking at people's opinions of what could happen, strategists, we are in a good position. We are not in a scenario that is dire to the health of our real estate market. So if you're looking to sell, it's still a good time. If you're looking to buy, it's still a great opportunity. You know, you could build wealth with your family and help your family grow. You can downsize, you can upsize, but homeownership is a wealth building institute for your family, and it's going to build generational wealth for years to come. So, and this ain't anytime slowing down. So if you have any questions, comments, please leave them. I would love to hear from them. Other than that, I hope you guys have a great 4th of July weekend.